Let's get to what you guys have both mentioned. The stock of the day is Meta. News out overnight. It shares surging, announcing plans to launch a cloud business selling excess AI computing capacity. It would mean Meta would manage data centers and chips while charging developers for usage. Bloomberg reporting that Meta would also rent raw computing power, not just software, hardware as well. And it did have an effect. We just mentioned there, Micron and SanDisk, they fell substantially lower at 10%. In fact, South Korean stocks, they've slumped today, driven by weakness in Samsung and SK Hynix. So we're talking about that volatility we're seeing right now. So let's focus though on Meta and looking to commercialize, I guess, its own computing power there, and so much spent on CapEx for Meta. That was the initial concern. Is it paying off? Mark Moreland, what do you think?
Meta's, I'm a shareholder, not major position, but I'm a shareholder. I think it's a bit of a nothing burger, personally. Meta's large language models, I remember at the beginning when this all took off, you remember we had the llama and the little llama, and they were right at the top. They have really struggled, and they're not even in the race at the moment compared to OpenAI, Anthropic and Google coming up the rear. They want to be there. So because they're not, and you can argue that their models are pretty ordinary, they're not getting the inference demand. So the amount of compute they would have, if they were Anthropic, they wouldn't be offering to sell any compute to anybody else. So I think this is just them being, following a bit of what Musk did. Musk has recently sold Spare Compute to Google and Anthropic for, I think it's $26 million total a year. Income, so it's revenue, it's fantastic. And I think that's all they're doing. And by the way, if they're talking about building new compute, they are so far behind the eight ball on where we are now. Musk was the first one because he got in very early when he built Cortex-1 and Cortex-2. Apparently he built them for 20 billion. So he's getting more in 1 year than what it cost him to build them. So he's getting incredible return on investment because he was early. Now everyone's had this massive rush to build out the neo clouds like Nebius and others we're talking about today. And then obviously the competition to get power as well. How do you come in now and try and grow, become a hyperscaler now after everybody else, everything's sold out for the next year or two or three, I just think it's like a bit of a yawn. So as a Meta shareholder, I think it's fine, okay. Obviously if they've got spare compute, they're going to sell it. But I don't see this as being earth-shattering that suddenly Meta's going to become a hyperscaler.
Yeah.
That's how I see it.
All right, so you're a happy holder.
Yeah.
Just on that, I think it's $2 billion a month. What Elon sold to Google and Anthropic. It's not. It's not 29 million or whatever.
I know.
But it's enormous. It's I guess similar with Grok. Like Grok's good, but I guess Elon's decided to prioritise. And he's going to get more money out of that than he is trying to compete with Anthropic and OpenAI and etc. and let them just duke it out and basically sell them what they can't get. Look, this was a big criticism of Meta platforms that they weren't doing this. They've actually got, and it affected the next stock we've got, Nebius, but they've actually got a long-term deal with them. Most of the analysts overnight were more so saying that there is likely a very large capex spend coming, and they're doing this to try and buffer the next earnings. That they're getting something out of it because they've spent a lot on staff and people as well. So, but yeah, look, and look, the pullbacks, etc. I think Nebius was down, 13 or 14% or something last night, or thereabouts, and I think broadly the sector got hit pretty hard, but it didn't change the fact that the Meta's got a 3-year deal with them. So. And they're not, and there was no mention of them, trying to get out of that deal or anything like that. So I think it, that sort of ensures their capacity. But yeah, look, for Meta, I think it's positive, but I'd probably want to see earnings first because they have spent a fortune on people and on general capex and there is. An argument that they're focusing their AI on improving the advertising, and they're making more margin now out of the advertising as well. But it's all a lot of hearsay essentially at the moment, and I want to see earnings before I bought in, because if it's a good earnings, it's pretty cheap. I don't think you're going to miss out on a hell of a lot. You know, if I'm a little bit concerned around this earnings being, you know, the capex spend is going with that memory chip blowout, etc. I think that all of the hyperscalers are going to be very harshly dealt with if their capex numbers blow out for a third or fourth quarter in a row. And it might be a good buying opportunity then. But I just would like to see the numbers first. I think in a couple of weeks.
So in the meantime, you would.
I just sit for now. Just hold.
Yep.
If you've got it, you'd be buying on dips and buying with momentum if they have a good earnings.
Righto, watch out for those because we are on the cusp of earnings season, so they're key results to come. All right, so that is the view. Double hold then for our stock of the day, Meta.